Dear students, I'm audible to you?
Yes, sir.
Okay, shall we begin the class?
Yes, sir.
Uh, okay, fine. Now, this is the topic that what we people have left in the last class in your module 5 of compensation and reward system subject. Okay, so we have to begin with incentives. Okay, we have to begin with the incentives. Okay, and we have two type of incentives which has been already discussed in your module one. What was the meaning of an incentive which any employees will be getting for the extra job, or some excellent job, or a contribution that he makes for an organization being on the job. Okay, so this incentives can be two: one, a positive incentive and a negative incentive. Basically, this positive incentive will be meant for motivating an employee, and this negative incentive will be in the form of threatening them, or for any mistakes those people do on the job, and some loss happens to the organization. Because of that, those people are going to be punished. So for giving a type of punishment, these type of incentives can be used in the form of negative incentives. Okay. There will be good, positive incentive, some, something that will be helping the, an employee in getting reward from the organization for any particular activity that any employee does for the organization. Fine. And because of that activity, what he performs and what will be the output, that output will be contributing to the organizational objectives, and some profit in the organization gets out of it. Okay, so maybe saving the cost of an operation sometimes, maybe because of the effort what employees put on the job, or sometimes extra output or productivity that been shown by the employee on the job. Maybe that will be saving some amount of money, okay, to the organization, and that the profit raises. So it can be also referred as a motivation. Example be like sales incentives for doing extra sales, or production outcomes. If more within less time, more production comes out of the operations production area, and because of the employees it has happened, and probably these type of positive incentives will be given to them. When we say negative incentives, which will be referred as very bad consequences, which will be discouraging the behavior of a an employee, like losses can be incurred by the organization, or sometimes fines also will be need to be paid by the organization for some mistake which an employee does, okay, to any regulatory bodies. Or sometimes encourage productivity by making the person not want a specific outcome. For example, like if he won't reaches the standard which has been set by the organization, and some amount has to pay to him as a salary, maybe that time it becomes very difficult for organization to maintain its profitability by paying for nothing what employees has been done. So because of that, those people can impose some fine on them, or deduction in the salary, some percentage of the salary for not achieving the target which has been given to them. So any sort of things which will be helping them to get encouraged. Some negative incentives also may hurt the employees, no doubt, but still they can bring some type of an attitude or behavioral change into the employees, that those people get motivated by themselves by going through such a difficult time, when those people are going to receive negative incentives. So there are individual incentives and group incentives. When we talk about these individual incentives, these are going to be based on the plan what organization or employer does, which are totally based on meeting any work related standard, especially for in the form of quality of a output, or maybe a productivity shown by the employee, and the customer satisfaction what a customer receives because of the behavior attitudinal support what an employee does on the job, and the safety or maybe the attendance being regular to the organization. Okay, so these are very important things has to be kept in the mind when we people are going to set incentive for individuals. Okay, and purely the assessment will be done on what was the output individually an employee has contributed to the organization. Now these are very important in certain situations, are appropriate when a performance can be measured objectively. Okay, very specifically people are going to work on individuals performance. Then sometimes employees have control on their own outcomes, and who are very self-managed persons. Okay, plan does not create unhealthy competition, Okay, individual incentives plans require even monitoring also, because sometimes what happens is like, when a plan is done, a compensation which has been brought to organization, and some people are going to earn it or some people may not earn it. So see to it that, earning and not earning will not make much difference among the employees. Okay, and but when we do, especially this, individual type of incentives need to be monitored personally by any supervisors or any governing body or authority who will be looking after the individual's performance on the job. So we have like, individual plans for a blue collar workers and white collar workers. Okay, when we talk about this incentive plans for blue collar workers, these are like, very shortest term, incentive plans, which is going to be given to the blue collar workers, and they can be classified into three type of categories. The first category says that, the plan under which the rate of extra incentive, okay, is in proportion to the extra output. If say it's a equal proportionate to, say you can say the 1:1. If 1% increase productivity or output, the 1% increase in the incentive will be given to the employee. Sometimes what happens is, in the second category, where any extra incentive which is going to be paid to the employees, that extra incentive is proportionately at a very lower rate compared to the increase in the output. Now maybe output, if it reaches 3%, 1% may be the incentive given to him. So maybe it's 1:3. So maybe this extra incentive, what is there apart from the salary, is lesser than the output what an employee has given to the organization. Now sometimes what happens, the plans under which the rate of incentive is proportionately higher than the rate of increase in the output. Is somebody to encourage employees, keep them happy and loyal to the organization. Some organization or employee can decide upon, if there is a 1% increase in the productivity, 2% increase, no, increase in the incentives will be given to them. So somewhere incentive will be much more higher than the output what an organization or what an employee has given to the organization. So there are some individual incentive plans. These you people have already dealt into your module 3, and the related material has been shared to you people, because you people have to come with the your assignment which you people have to write on this. So what I thought is that, let me brief it to you people, okay, in a very precise manner, which can help you people better in understanding the material which has been sent to you for your assignment purpose. Okay, am I audible to you?
Yes, sir.
Yes, sir.
Am I audible to? Okay. Okay, let's begin then. Say the two type of individual incentive systems can be used by any organization. One, it may be a time-based system where purely incentives will be given on the basis of the time which has been invested and utilized properly by the employee. And second type, we go with a production-based system where it purely depends on the total output. Okay, what all the people has to, all the individuals will be contributing to the work. So, as you remember, if you recall what you people have studied in your module 3, okay, here we have a Hesley plan and then Rowan plan. Both are almost similar, where the standard time has been set for the employees and given to them, allocated to each individuals, and what time that individual takes, okay, in completing the job which has been given to him. Okay, and they are going to calculate, see to it that, the time taken and the standard time allotted, at least minimum it has to match. If they exceed more than the standard time, okay, and probably those people will never get an incentive. Okay, and the people whose taken time is lesser than the standard time which has been set or allocated by the organization, those people are going to get some incentive. So that incentive both will be given in the form of hourly rate, each hour how much those people have taken in giving the required outputs to the organization. The slightly the formulas are going to be changed. Okay, and the way those people are going to calculate, but ultimately, this purely Rowan plan or Hesley plan, both are going to be depend on some standard time which has been set, what time has been taken by the employee. If it is exceeds the standard time, no incentive. It exceeds, I mean, it is below the standard time, so how much time has been saved by the employee, that amount Okay, whatever has been fixed on the basis of hourly rate. If 1 hour is going to complete in advance, so for 1 hour, whatever the rate has been fixed by the organization, that rate will be given to him in the form of incentive. So we have immersion plan, the simple one where this is something what standard time has been set to them, and if they are going to match that standard time or below that standard time. Here under this plan, bonus is 20% of the wage earned at 100% efficiency. Let's say if you reach 100% efficiency, whatever has been set by the organization, you get 20% of the wage. Okay, extra. That is in the form of bonus or incentive. And also the condition says that increase by 1% with every percent increase in the efficiency. They later on what happens is once you people get minimum 20% for 100% efficiency, if you do extra 1% for every percent increase in the efficiency. This is proportionate, 1:1 for any extra thing. If extra you do 1%, extra 1% incentive you people are going to get. For 100% you get 20%. Above 100%, if it is 101%, you get 1% as an incentive. Then we have PDX plan where this is a plan, as I told you, this also sets some standards time for any job which has been given to the employee, and also they are going to be determined in terms of minutes. Here they won't go with the hour, they go with the minutes, and each minute we say it as B's, or we call it as Bedox points. Okay, and remember these each minute what we represent it as a B. Okay, so each 1 minute no through time and motion study, no, so both they will take it where how much time has been taken each minute, and for each minute those people are going to pay you some amount. Okay, so we have the second one, like production based system. This first we have a Taylor's differential price rate system. Okay, to brief you up with this, here this principle usually underlines that the system is towards something giving a rewards for the efficient worker who is on the job. Okay, and also penalizing the inefficient person. So whosoever is very efficient, and whatever the standard time standard the output has been set, whether he is going to achieve it or not. Okay, if this overall performance matches the requirement of the organization in the form of productivity, okay, then that person will get a incentive. If he is not so efficient enough in doing, so he will be not getting any incentive from the organization. And sometimes what happens, they say that if he is inefficient, no longer that person is going to be in the organization. This is very purely self efficiency, talks about a very lesser time, more output that any employee has to give to the organization. So input should be less, or so output should be more. Then we have like Gantt's task and bonus plan. Under this, the workers are guaranteed with the minimum wage. Okay, for taking any standard time or more. You take, let it be more or less. Okay, reaching equal to the standard time, they get a minimum wage. Okay, which is very much guaranteed. And any person who will be taking very lesser time, okay, then whatever the standard time has been set, okay, he gets time wage plus the bonus. Now reaching the standard, okay, and also maybe he takes a very lesser time compared to the standards. If he takes lesser time, on that basis he is going to get some bonus wage. Okay, wage plus bonus, salary plus extra. So next we have the group incentive. Those were for your individual incentive plans. We have next group incentive plans where this schemes of an incentive will be very much applied on a group basis. Okay, and these type of incentives for the groups. Okay, these schemes are very much appropriate. Where jobs are very interdependent. Remember, here certain jobs cannot be done individually, and you require more number of employees from different fields, from different departments, okay, into the group. Those people have to perform the job. In such type of jobs, here incentives are given. For example, like if you go with a business to business selling, where highly technical products, okay, so to sell those technical products, bigger machines, which cost too high to any organization to buy. At that time, what happens? The selling organization will be having a group of people from different fields. Okay, somebody from marketing department, somebody from sales department, somebody from purchase department to tell about what materials has been purchased and how those people have been assembled into the machine. Some people from the mechanical department who can demonstrate and he can clarify any doubts or objection from the customers. So somewhere all the people in the group, those people are going to sell the product to the customers. So in such type of jobs where they are very much interdependent, no, these group incentive plans or schemes are very good. Okay, so these incentive, plans for a group are a very reward for collective performance, which is done by all the people collectively. Okay, they are most effective when all group members have some impact on goals. Whatever the contribution that all the team members, each team members into the team, they contribute, that has to contribute or give some impact on the goal which has been set by the organization. So there are certain advantage of having group incentive plans because more cooperation among the workers can be brought. Okay, because they come to know that if they work together, they get a good incentive, and supervision will be reduced. Okay, because all of them will be working into the group and helping each other. Okay, and there will be a sense of belongingness, cohesiveness. Among the group will be very high enough, and on that basis, those people are going to be working together, and also absentees will be reduced. The problem of absenteeism will be reduced. Okay, and the clerical work will be also reduced because everyone will be so motivated enough in the group where to earn the incentives they won't wait for somebody else. They will take care of all small activities, which is very minor, but it also requires certain cost from the side of organization, that will be also reduced. And shorter training time because each member in the group, they will be having the composition of group always happens with highly skilled or semi-skilled and unskilled people where each and everybody will be helping and also guiding them. So on that basis no, sometimes little training is much more enough for group type of work. Then we have advantages of disadvantages of group incentive plans where sometimes what happens, the inefficient workers, if they do any problem, say one or two people among the group, they become very inefficient, efficient, and due to their misbehavior, the entire group will be penalized. The person who has contributed well and done efficiently, even he will be also penalized. So there are pros and cons, right? And sometimes what happens, the incentive which those people are going to get, okay, from good may not be strong enough to serve its purpose, where each members will be getting same type of incentives. Fine. So requirement of the people will be changing enough. Next we have something like the rivalry among the members of the group usually makes a problem, and group will also fall into the problem, and the task or whatever has been given to them will not be completed properly, and the cooperation you cannot, you can forget it, because people become rivalry among themselves, maybe for the power those people do, maybe for the affiliation that those people are going to do, or sometimes the ego problems can also make us team disturbed enough in working on team task. Okay, so there are certain group incentive schemes, like we have Priceman, yeah, plan, then we have a Scalen plan, we have profit sharing and co-partnership. Okay, we go one by one with this. Now, when we talk about this, Priceman's plan, this type of a system of a wage payment was first used by Priceman's of Hull in 1917. Okay, here I just go on reading you. Just listen to it carefully. A standard production is fixed for the whole enterprise under this plan. So entire organization will get a one plan. So on the basis of the production output which is required by the top management, that will be given as a target to the entire organization. Okay, and also if the productivity is going to exceed whatever the standard has been set by the top management, then bonus is paid according to whatever the increase in the output has been given by the total in the employees of the organization to the top management. Fine. So any increase happens, increase in the output happens compared to the standard time which is given to them. Standard which has been given to them. It may be in the unit or maybe in the price. Okay, amount. If it is given, if it exceeds. okay, the entire organization will get a incentive. Okay, in case may not, there is a possibility that the production may not reach the standard which has been set by the top management to the workers. Then usually they will get a minimum wage. Okay, there's nothing like they are going to get a deduction into their wages or nothing like that. They get a minimum wage. No extra amount will be paid in the form of bonus or incentive. Okay, we have an example here. The standard production of 2 lakh units is fixed for particular year. You take it. So actual production during that year may reach around 2 lakh 40,000, which is something 40,000 units more than the standard production which has been set. Okay. So since production has gone up by 20%, okay, workers will get 20% higher wage or a bonus. Simple. Equal to output, those people are going to get more wages. And we have Scadden plan. Now this is very essential plan which works on suggestion scheme, which is going to be designed to make the workers to involve in making or giving suggestion to the organization, while they give more suggestion or their concentration will be on something how best a cost of production or operation can be bringing down, and what methods can be inculcated into the organization process, okay, production process, where those methods will be reducing the cost of production. Also, those people can share the gains which is going to be increased by the productivity. Okay, so they say the plan is has certain characteristics, which are by two basic features you people can find in this, where the both employees and managers can participate in the plan by submitting the suggestion for cost cutting methods. Okay, both of them. There is no hard and fast rule. Only managers or top management people, or maybe functional management people, or any sort of managers or supervisors who will be included. Even along with that, when a shop floor person who is working on machine also, he can also be included in taking the suggestions. The second, we have like increase in efficiency on account of cost cutting. Okay, cost cutting is shared by the employees of the unit, where those people can also increase the efficiency, okay, by having some good idea about how best the cost cutting can be used in the organization by giving due respect to the quality production, fine, and customer satisfaction. So, okay, so this they often are going to be used in service industry, especially this scale-on plan works well into your service industry, which they focus more on customer services. Okay, so we have one like successful to encourage a sense of partnership among the employees. Okay, where if the suggestion is being taken by the employee and it has been worked out, okay, by the top management, and decision are taken that this can be taken as a foremost consideration for cutting the cost, probably that makes a sense for all the employees that okay, their suggestions are valued a lot and the belongings comes easily, fine. Then improved employee employer management relationship, okay, due to this one open door type of policy, okay, which will be helping to build a confidence among each other, among the employee and the employer. Then we have increased motivation to the work. If people make employees to come into the strategic decisions, probably that can usually help an employer to get a very highly motivated employees for the work. Then we have next, the third one, profit sharing. Okay, this is something like whatever the profit which is going to be earned by the organization, that will be shared among the employees. An agreement, you say it is maybe a formal one or informal, okay, which is freely entered into, by which that any employee will be receiving some fixed share in advance of the profits. Now, any profits earned, okay, out of that profit earned, some amount of share will be distributed among the employees, okay, according to the cadre. Now, see the very important purpose that behind having this type of profit sharing to the organization is one, it is going to increase the loyalty of the employees, where employees will not move from one organization to another organization. The switching of employees will come down, the attrition rate will come down. Employees become more loyal to the organization because they know if they give more profit to the organization, some amount of the profit is going to be shared among them. Okay. Then next we have like sorry, we have some type of profit sharing, where Metzer has classified into three categories. One, current, deferred, and combination. Now, this current always talks about, this is paid to the employees in cash, no doubt, or sometimes they give some check, or even sometimes those people are going to give some stock options where some stock of the organization can be taken by the employee. Okay, immediately they give after the profit is determined. Once it is calculated, immediately it is being going to be given. Now, deferred, this talks about, these are the profit, whatever is there, no, the amount is going to be credited to the accounts of the employees. It will be paid at the time of the retirement. Okay, or sometimes in between it is going to be paid only because of a reason they become disabled for working, or the death may happen, their belonging people or any nominee people will get this. Okay, maybe some withdrawal, etc. Okay, they may leave the organization immediately in between. So these people are going to get whatever the profit has been accumulated in their account. Okay, then we have a combination where some amount will be paid and some amount will be, I mean, they are going to put it to the accounts of the people. Now, this is a combination of current and deferred. We have co-partnership where these employees will be participating in the equity capital of a company. Or sometimes what happens is these type of schemes will make an employees can become a shareholders. Okay, and they will be having the shares of the company with them. Okay, equity shares. Right. So then now sometimes what happens, because of this, the employees are going to be allowed to participate in some management decisions when the meeting happens because of the shares those people have earned because of their efficiency in contributing to the organization. So somewhere they will be acting like a owners at the time when those people sit on the chair for discussing on profits and some management related decisions. Then we have a cafeteria compensation plan. This is a very unique one where it will like a menu to the compensation menu, we can say. Compensation menu to the employees where those people can select what type of the incentives, maybe benefits those people are they are required from the organization. Okay, now we have something like a plan that allows employees, okay, within limits, some limits will be given, that's why the menu is given to them. Okay, within that only those people can order to choose the benefit from a cafeteria, or we say it as of benefit plans which will be provided by the employees. Cafeteria, okay, it's a condition here where that menu should compulsory include the cash option. Immediately who requires the cash, those people can take it. Okay, example we of a cafeteria plan we have. All employees will be given benefit package with say example we have. These all are some items into the menu of a cafeteria plan. Here, term life insurance, which is equal to 1.5 times the salary. Okay, which is been paid by the organization. Okay, on behalf of the employee. Medical expenses or insurance related to that. Okay, of an employee as well as the dependent of an employee to his family. Okay, short and long term disability income insurance, if something happens in between, if they are working on machines, and because of that, at that moment, the company will not pay, the insurance will pay, insurance companies will pay, because the premium of that insurance will be paid by the company till that day. Then employees also receive some credit based on salary. Maybe some what is the salary those people are earning in the organization on the basis of the time those people have served, and taking due consideration for giving due consideration for the loyalty and the tenure those people have into the organization. Fine. On that basis, those people can get some additional credits. Okay, what we say loans on that. Fine. So there are certain advantages, more likely to appreciate the value of their benefit package, where they themselves will find that whatever has been chosen from the cafeteria plan of compensation, the employees will find it as very worth one, because what they need, if they get it, it becomes worthful. And that worth can change from employee to employee. Somebody want an insurance, somebody want cash, somebody want stock options. Fine, depends. Now this cafeteria plan is very flexible, which will be helping at any employees, as I told you. Any need which those people have at that moment or that year, those people can earn it. Okay, again they can satisfy it. And these type of cafeteria plans will be also helping to control the employer cost. So because the employees are going to be selecting only those benefit what those people can want and whatever can be delivered by the employer. So there is something disadvantages. So we have like complex and very costly to design and administer because what can be paid by the employer very keen observant the employer should be, and what can be possibly very profitable for the employee as well as profitable for the employer has to be decided. It is not so easy in this case. Okay, not all insurers will provide their program on a cafeteria plan basis. For example, life and health. Sometimes it can also happen where this whatever the plan that employer gives that should benefit the employee for while submitting the tax to the department. Fine. So highly compensated employees may lose tax benefit if plan are going to be different, discriminatory among themselves. Fine. So that becomes very difficult for them. Okay. Now we have something like incentives for white collar workers. We have straight salary method where there will be no incentive at all. The sales person will be paid on the basis of weekly, monthly, and maybe on the basis of year. There are certain advantages. Remember, in the state salary is paid to them. Nothing extra those people are going to get. Now, for example, advantage is that any salesperson will know in advance what is going to be paid to him. Okay, in the form of income. Okay, and also the expenditure. Okay, on salesman is known before the hand for an employer what may be the cost that I'm going to incur if I pay and compensation to the salesman. On that basis you're going to decide what level of target should be given to the employees or the salespeople. Now, what is the disadvantage of this method is that this tends to shift salesman emphasis just making a sales rather than finding a new prospects or having some good long-term relationships with the customers. There extra things will not be given. Okay, so bringing new customers to the organization, prospecting, what we say, new customers to the organization, then keeping long-term relationship with the customers. Okay, where the more value is given to the organization by the customers. Now that type of relationship cannot be built in this because that will never motivate any salesman, because salesman says that whatever has been paid is a fixed one, why should I make much? So only what he does, whatever the sales target is given, he will achieve it and finish it off. And extra they will never do. Now pay is not related to the results here. Okay, whatever you work, however you work, the minimum wage that or salary that you people are going to get. So somewhere handling salesperson, okay, and the reduction in the relationship also happens. Now we have a state commission method. Here, the salesmen are going to be paid completely on the basis of the what sales those people have done. Okay, that is here. They are going to be paid for whatever the results those people have given, and they say only for the results they get. Whatever they do, that much those people are going to get. So therefore, high performance salesmen are generally attracted. Here, salary will not be there compulsory. The commission is going to be working out. Only the commissions are going to be paid, not a salary. You do 1 unit sales today, for 1 unit how much pay has to be given as a commission, that much they are going to get. There will be no minimum wage, no minimum salary. Fine. So there is a disadvantage here that salesman will be focusing more on the sales rather than developing a good relationship with the customer. So that becomes very difficult. Okay. And second, like salesmen tend to be very less company oriented. Loyalty people cannot expect from the salesman towards the company. Fine. Today this company, tomorrow another company. This is what the attitude any salesman is going to generate, and there will be not much control over the salesman. So this becomes very difficult for an organization to maintain such type of salespeople. And what happens is the fluctuation into the income also happens for any salesman generally. Fine. So he cannot plan his any expenses properly. Fine. So that becomes very difficult for him. Okay. Now we have combination method, which is a combination of both what we people have discussed. Okay, where the commission as well as the salary both will be joined together. Here, salesman not only just gets the fixed salary, but also he gets a commission on whatever the sales that person has done. Okay, on some proportion. Okay, as I told you. Maybe like there are certain advantages of this method is that here the salesman is assured with the minimum wage that he's going to earn for a particular time period. Okay, as well as he's going to somewhere it will take a salesman from the worry about his financial aspects. He will be free enough from that he can plan properly that on the basis of whatever the minimum wage that person is going to get. And also the control of the company will be very high on the employee, I mean on the sales people, where there is a very stabilized salary component. Okay, in most combination, and if you say you see any combination the changes, sometimes what happen, the fixed amount as a salary, okay, and the maybe the contribution what an employee does on that basis, the incentives are going to be or commissions are going to be varied, but at least that will be stabilizing a person on the basis of uh, you know what is that, the salary what minimum he is going to get, okay, in advance. And we have there are certain advantages for this, where the main advantage is like that salary is not related to the performance. Now here you cannot expect the performance. Some salesperson want to perform more and earn more commission. Some people are very lazy enough, they take it very lightly and they say, anyway, the minimum salaries that I'm going to get, I'm very happy with that, and no performance extra those people are going to put on the job to get more value for the organization. Okay. Okay, now we have something incentives for management employees. Okay, the managers who are paid bonus. There are two type of bonus that will be paid to them. One which will be determined by the formula, that is like some criteria like increase in the sales, they get an increase in the bonus. Right, and some in the other part, if it is second one, which is determined by discretion used in allocation of the bonus, which is going to be paid. Okay, the size of the bonus is much higher for top level some executives. For lower executives it will be very less, or sometimes more or less payment will be given on the basis of what performance those people are going to give. These people are going to be much more paid on the decisions that those people take, the quality decisions, how strategically those people make an organization to come up, okay, and grow well. So these, top management level, incentive payments are very high enough for them. Okay, no doubt at all. Usually they will get on the basis of some percentage based on the salary those people are paid in the organization by the employer. Fine. So more performance, more incentives. Sometimes the profit sharing also can be much more higher. You people can take that as as an example here. For those people, company profits, out of the company profit, some share will be also distributed among them. Okay, so this completes your module 5. Okay, okay, any doubts you people have? Any doubts? Any doubts that you people have?
No, sir.
Or shall I wind up the Okay, shall I wind up the class?
Yes, sir.
Okay. So from your next module onward, next class onwards, we will be begin with the module 6. Okay. Once your all the modules are completed, so I will be sending you the assignment list. Okay, what you people have to submit. Along with that, I request you people to be ready with any sort of presentation if you can. Otherwise, the entire syllabus will be divided among you people, and you people have to present on that. Okay, on that basis you people can go through. Fine. Okay then, I will be winding the class. You people can leave the meeting.
Thank you, sir.
Thank you, sir.
Thank you. Welcome. Yeah, welcome.